Bert Hofman is the World Bank chief economist for East Asia and the Pacific region. Haslinda Amin asked him what he sees as the biggest risks to growth in this part of the world.
Europe is definitely one factor, and right now it's playing out through a number of channels. The one is the trade channel. The other one is potentially the credit channel, where there's quite a bit of credit from European banks to East Asia, and that may change in the course of time. And the third is a little bit the confidence factor. You do see quite a bit of confidence in manufacturing industry going down, and some industries that are important for East Asia, such as electronics, are already seeing negative growth.
Bert, you touched on the issue of credit from Europe. How real is the possibility of a sudden stop of banking sector credit from Europe to East Asia?
We observe that credit from Europe is quite a bit for East Asia. It's 460 billion or in that region. It's still the lowest among the developing countries' regions, but nevertheless it's almost 6% of GDP, so it is a considerable factor. In previous crises, we have seen this going down quite rapidly and turn negative. So going forward, as European banks will have to consolidate to some extent to meet their 9% capital requirement, credit to East Asia may actually be affected.
Let's talk about China. Its staying power is being questioned yet again. A recent global poll suggested that China's growth was slowed to below 5% in 15 years. How much of a risk will that be for East Asian economies?
And we believe that if you want a soft landing is entirely feasible. The numbers and the policy attention given to some of the risk out there in China, in our view, give us confidence that a gradual slowdown in growth to somewhat below 8% is going to be feasible. In the medium term, as China develops and as China becomes closer to income levels of advanced countries, growth is simply going to be harder. So we do think that in the medium term, China will slow down. How much that exactly is going to be and whether the 5% is the magic number or not, I think is in a way not that relevant. What is important for China to understand is that if it wants to continue to grow, it needs to change the structure of growth.
So is China a threat to this part of the world? Because excluding China, growth would be half of what you've projected for East Asian economies.
Well, I would say that China is an opportunity for the region, and if you look at the numbers now, you do see a bit of a shifting in the patterns in China. Imports from China into China are holding up quite nicely, and it's becoming increasingly a market for consumption goods of manufacturing countries in the region. And as I said, the risk in the short term of any hard landing we see as very limited. We believe that a soft landing will take place. So China has continued to be a positive factor for growth in East Asia.
Are you comfortable with the policy responses you've seen from the governments here? They've either cut rates or left rates on hold. They've also let their currencies depreciate.
Well, what we have seen over the last 6 months is clearly a shift away from concerns about inflation and asset price rises and capital inflows to one of managing the volatility in financial markets. In the medium term, we believe that other factors than monetary policy will be more important to maintain growth in East Asia.
So having said that, do you expect East Asian economies to continue monetary easing in the coming months?
We expect for now that the sort of the wait-and-see attitude, putting monetary normalization after the financial crisis, to put that on hold for a while to see where things are going, that's going to be the main policy stance of the people of the countries around the region.